Hey, good afternoon, traders. This is Trader Tim from over at eminimine.com doing a Monday market analysis video. It's November 9th, 2020, and big gap up today. A little bit of a slide most of the day, but holding most of the gains from that gap up this morning. In the video today, I want to touch on some technical analysis pieces. I wanted to kind of run through my current position holding, what I still have and what I've closed out of, and then we'll look at a couple of ES day trades from today. So with the gap up today, that puts us in the new high territory, and we have got the negative 23% target above us. We've tested the 50% twice. Um, a good amount of support here, both from the two tests as well as the prior highs from back in June, and then we kind of move sideways at that level as well. So from here, it would make sense that we come up and close in on that negative 23% target. It may not be a straight shot, but we'll see what this week gives us. If we continue this gap trend, then we could be there in 2 days. If we move sideways a little bit and do a little, what would be more typical to see, kind of a bull flag, a breather, and then push up, we could, at this rate, easily just continue on to the negative 61.8. So lots of upside potential. I've kept on the hedge that I put on here, the SPY puts, even with a big gap up like this, because the VIX did not drop very much, the hedge really didn't lose much money. Um, Certainly the long positions that I had, as well as adding on both tests of the 50%, I added to my long-term position, and typically I'll use the Vanguard's VUG as far as retirement long-term in my long-term account, and so I wasn't too eager to close out of the hedge just because it really didn't do that much, didn't go against me that much, and the longs easily outpaced the hedge today. Where you see a big decline in your hedge is when you have a really high VIX, and then that just sort of implodes, and you have a 5 or a 10 point drop in the VIX. Now all of a sudden, those option contracts really start to lose value. I don't have any swing trades on at the moment. I mentioned that I bought some more VUG back here at the 50%. I also cashed in some Bitcoin, just above over 15,000. It was like 15,500 last week. That's kind of been a sleeper here this year. At one point, we were below 4,000, and I sold a fair bit, a couple years ago when we came up to this 15,000. Bought a bunch more when we dipped below 4,000, and then I still have that initial position from like 200. So cashed in a little bit there. It certainly, has a lot of room to run, but I also don't want it to just turn around and do nothing. So, or turn around and give it all back. Let's shift gears to the ES for take a look at some day trades. With the big gap up today, I always follow the same process. I'm going to get rid of all the drawings here, and we'll go from square one. So with the gap up this morning, first 15 minutes, I let the market settle out. I'm not placing any trades in that first 15 minutes. And what you can do is just draw up, the first retracement on that 15-minute chart, or if you've got the 5-minute chart, same deal. Just drawing up the first retracement that's visible on that 5-minute chart. And we had a sell-off from the open, bounced, and again, this is all in the first 15 minutes, but right about at that 20-minute mark, we bounced and set up in a halfway back short on that 5-minute time frame. So coming over here to the 512 tick chart and coming in and drawing up the first short setup, because the setup on the 5-minute was a short, so you want to go in the same direction. and then using that as your entry point. So you kind of use the larger time frame for your validation, and then the smaller time frame for your entry. And then this one was a little bit finicky as far as we had a nice sell-off from 28s. The next retracement held. The third one, it ended up trading through the 61.8. It didn't break the swing high. So if you're just going to trail the swing highs on the way down, you'd be safe. But for those that trail the 61.8, and I typically like to do that. The low down here is at 36.19, and it traded all the way up to a 36.25. So 6 points, kind of getting into the realm of, well, I don't want to give that much back. If you're going to use a 2-point stop, you could close out of the position and then re-enter and not have given up as much versus letting your stop be so far away that in order for it to roll over, you have to give up 10 points. That's getting a little bit the reward to risk is getting a little bit skewed there. So I typically like to trail the 61.8. This one, basically went from a 36.28 down to a 36.2350. And then if you were trailing the swing highs, which if you have multiple contracts, you can do both. And I'll typically break my stop up into multiple locations. But I try to hang on to as much as I can for as long as I can when these trades, go my way. But the idea is trying to get to the negative 23% target of the larger time frame. So that's down here at 36.11. So if you're getting in on the 512, try to keep in mind that bigger picture and do what you can in a reasonable reward to risk ratio to try and hold to get to that larger time frame. Once we got down to lows, or once we got down to essentially that 30-minute mark, if I throw on a 30-minute time frame, I like to mark the high and low of the first 30 minutes. I won't bother doing the high because we didn't break it. But if we mark the bottom of the first 30-minute low and looking for trades around the 30-minute high and low is a really good high probability area. And so looking for halfway back trades like I just had drawn up when the market's trending. And then when we come down to the bottom of the first 30-minute range as we did today, looking for those reversals for a potential range to be setting up. And this one came down to the bottom of the first 30-minute range, broke the swing high here, and then just drawing up the long like this puts you in at like a 36.09 and a quarter. And then this one had a pretty nice pop initially, and then depending on how you want to trail your stop, when you go through the negative 23 and through the negative 61.8, if you want to draw up the high to high, the extension, you can and put your stop under there. This one kind of lined up perfectly where the extension kept you in. If you were just trailing the traditional where you would draw from lows to highs, it would have also kept you in. It's just your stop is a little bit farther away. So if price is trading up here at 36.22s and your stop is down at 36.12s, now you're getting into that realm of, am I willing to give up 10 points to see the market go higher? Maybe 5 points, maybe 10 points, but am I willing to give up 10 points on this trade versus closing out the position and then looking to re-enter? And as I said earlier, I like to trail my stop as opposed to constantly getting out and re-entering, but you always want to keep that reward to risk in the back of your mind, or really front and center, not necessarily the back of your mind. And so once you go from the extension 50% up to the negative 23, then you can go back to the traditional. This one didn't even get a hint of a pullback. And then when we kept going higher, you could just repeat that process and go the same high to high, or the same kind of process of going high to high, and then getting taken out up here, or um, you can get really tight and just bring it up underneath the swing low if you want to as well. So kind of the three methods for trailing my stop are trailing it behind the 60-1/8, trailing the swing lows or swing highs if I'm short, and if it's just I want to get really aggressive, I'll just come in and trail each candle, the low or the high of each candle. So tomorrow morning we'll be doing a live trading session as we always do on Tuesdays. You can tune in over at eminimind.com/VIP. We'll go through kind of the same kind of stuff as we do here, just in real time, drawing up the retracements, setups, answer any questions that you have. And I hope everyone has a great week, and we'll talk to you very soon.